This hearing is entitled, Examining Facebook's Proposed Cryptocurrency and Its Impact on Consumers, Investors, and the American Financial System. I now recognize myself for 5 minutes to give an opening statement. Today, we're here for a hearing on Facebook's proposed digital currency, Libra, and digital wallet, Calibra, and their impacts on consumers, investors, and the financial system. Our first witness is David Marcus, Calibra's CEO. Following his testimony, a panel of experts will share their views on Facebook's plans.
Thank you very much, Madam Chair, and both you and Mr. McHenry for holding this hearing so quickly after the Facebook announcement and treating this issue with the seriousness and thoughtfulness and care that it deserves. Facebook is not making this proposal because it is interested in competing with Western Union. Facebook is making this proposal because it wants to be in the middle of as many transactions that occur across the planet as possible. If it can get all of them, it'll take that. That is a serious business that this committee absolutely must be paying attention to. I want to raise 3 particular concerns with Facebook's proposal that I think could be ameliorated with extremely aggressive regulation, but not cured. But before I do that, I want to make a point that follows on from what Mr. Gensler just said. Facebook, as a company, cannot be trusted. I mean that in 2 senses. First, Facebook has repeatedly, it's not just that people don't like Facebook, Facebook has repeatedly violated its own privacy policies. It's not an external thing that was imposed on them. They adopted their own policies and they violated them. Not once, not twice, but over and over and over and over and over again. Look at the last consent decree, see the listing. Wait till we see this consent decree, see the listing. This is a company that can't be trusted. But it's worse than that, and this is the second point. Even as Facebook maintains its promises, they are unilateral, voluntary, and subject to change at any time. So key features of Facebook's Libra proposal are completely up for grabs and change over time. For example, the one-to-one reserve. That would make a difference, but they could unilaterally alter that commitment. The idea that the money will be invested in stable currencies would make a difference, but a promise that could unilaterally be invested. The idea that there would be a firewall between Calibra and Facebook, a unilateral promise that could be invested, and you would be foolish to think they won't change that one because they change their privacy policy almost every year. Against that backdrop, 3 particular considerations I want to raise. First, the competition policy and monopolistic implications of this proposal. As we've heard today from Facebook, immediately upon adoption of Calibra, it will be available to 2.7 billion users around the world. So it is a certainty that Facebook will dominate the market for Libra and perhaps for all digital financial transactions. There may or may not be other wallet competitors in Libra, but no one's ever going to compete with that. We're going to see Facebook immediately extending its dominance in social media to now the dominance in the payment transfer business. The Libra Association itself has the makings of a cartel. There's already talk about giving discounts among the Libra members, for sure going to be used to advantage those who are inside and disadvantage those who are on the outside under the leadership of the dominant member of the cartel, Facebook. We have a long tradition in the United States of separating banking and commerce under the Bank Holding Company Act. That has expressed a lot of wisdom, protected us from a lot worse financial crises, and we need to apply those principles going forward. Second, big concerns about consumer protection. Inherent in the Libra proposal, the idea that you're going to make no-interest loans as a user to Facebook, the idea that you adopt foreign exchange currency risk, big problems. But within this new Facebook Libra ecosystem, massive consumer protection problems as you have a global, privatized, borderless currency. What happens when you get that payday loan that they're bragging about? You just didn't realize it was from Ukraine, that the choice of law became Ukrainian law. Third problem, privacy. Again, as I say, no reason to believe there will be a separation between Calibra and Facebook, but even if there is, Facebook will understand what's going on based on users' use of Facebook. They will gather all this data. So whether or not they do what they say they're going to do, if this process proceeds, we would like to see the creation of a corporate surveillance leviathan with no precedent in world history and only imagined in science fiction dystopian novels. It's not just a matter of things being creepy, it's a matter of them monetizing and commercializing our lives. It's a matter of them worsening potentially the algorithmic discrimination that is already an increasing problem. It is a matter of them then leveraging that data to crush their competitors. It is a matter of overall less innovation, not more innovation, both in the digital economy and in the rest of the world economy. Finally, as a last point, I just want to say this committee is now floating the idea of the Keep Big Tech Out of Finance Act. We think that is exactly the right approach going forward. This is far too dangerous a proposal to permit to proceed. That is one way to shut it down, and I hope this committee does, in fact, do that. Thank you very much.